Okay, welcome to Trenches. Bill, you can't say anything obnoxious because we are on the air.
What
Okay.
makes you think that I would be obnoxious?
To be safe, Bill, you can't say anything.
Okay.
Oh, beautiful.
Thank you for coming. Yeah. We'd
Okay.
love to have
We
you.
I
always-
feel welcome.
I was gonna say, everybody feels so welcome. All right, let's see. We have a success story.
Take it away, Sarah.
What's your name out there?
Yeah.
What's this about?
We actually got it.
Yeah. We had a great first-time home buyer that was just looking, who's kind of getting discouraged because he had a dog and we're trying to look for a condo that would accept his size of dog. Like, I mean, he's 80 pounds, 90 pound German Shepherd. But he's like, this is my child, this is my kid. So Amanda's been helping me on it and we finally gotten the contract.
So was that a referral then? Oh,
Yeah.
wow, thank you so much for that.
And I have to branch off of this story and say that the reason he was successful, so at the last hour, there's 2 other offers in the door. So there's 3 of us all competing. And the other realtor calls us because I told, if you're watching this, Forrest, stop. I told the other realtor that Darren was this amazing first-time home buyer who had worked so hard to get into a position where he could buy, and how he was young and just really hoping to make this his
He's
first
ready,
home.
yeah.
I tried to pluck some heartstrings on this one. And so for the last hour, the realtor calls and he says, hey, these offers are all pretty similar. Is this your buyer's highest and best? And, I get Kathy on the line and, we're doing fine. No.
Okay.
And Kathy does negotiating even above and beyond what I was going to do. And she gets out of this other realtor what we need to do to make Darren successful. So I stay late at work, write up an amendment really quick, get Kathy's approval on it, get it out the door to Darren, have him sign it, get it over to the other realtor.
You got us a 90%, you're 90% immediately.
Which makes a difference.
And we had that over, and by the end of the night, I had a text message from the other realtor saying, congratulations, we're in contract.
But there's a little bit more to the story. It's also buyer confidence. This buyer had so much confidence in you and Amanda that when we asked the buyer, the other 2 offers were cash offers.
Yeah.
Doesn't mean they were great offers, but they were cash. And that turns any seller's head, especially if the seller can't do the math. Hey, Joe, you're over there, next to Bill.
Sorry about that, guys. No, we're just wrapping up.
So, yeah.
But what happened, because of the buyer's confidence in both you and Amanda, when I said to the buyer, if you really want to get involved in, this is what I need you to do. I need you to increase your offer price by $2,000, and we need you to pay for the appraisal. And he couldn't say yes fast enough, because of the confidence he had in the 2 ladies involved with him. So that makes you feel really good, and that's really what it's about. Thank you, guys. So that's a good success story. Any others?
No, we just took your bras away.
I'm coming very close to closing on the home that I'm buying.
Yay!
We're so glad we want to hear about it.
So that I don't have to
Do you
tell
officially not own the other one now?
Yes.
Okay.
We,
Steps
we,
in the right direction.
we closed on Reliance. Sorry, everyone who's late to the marketing meeting notes. Reliance is no longer on the market. But, yeah, we only had to extend 1 time. And I'm knocking on wood. I'm not even going to say a date. It's just coming up soon. It's coming up soon.
That's what I used to.
I've got to share this with you. When I first joined the business, I was Mrs. Optimism and everything else. And as things happen throughout transactions, I remember Robin on the team, she goes, if you weren't superstitious before you came into real estate, you will be.
All right, Carl, you want to give us an update on who's winning and who's not?
I do indeed.
Put 50 points on team 1 for Suzanne.
Well, it's not in writing, so we're not.
Because that would negate all of the Team 1 has 0 jokes that I've been calling over the last 10 minutes. So I will skip them. Team 1 has 0 points. but allegedly 50 are coming down the way, so.
At least 50.
At least 50. Get them. Which is a threat to Team 3 with their 65 points. So we've got one person on Team 1 who's looking to cover that spread. So watch it, Chelsea/Kathy.
You're welcome.
Team 2, Captain Me. Not a big sigh.
The stacked team.
99 points. Big point getter there is Amanda. She's 14 prospect calls. She's handed out 12 business cards. This is all since the beginning of April. April 4th.
I have to admit, I have an unfair advantage. Every customer I help at Men's Warehouse leaves with one of my business cards.
That's okay. You put it in a
That's
box.
that's
That's
not an
yeah.
advantage. That's using
I
your
stay put to
position
their
wisely.
receipt.
You don't want any secret agents. No secret agents. And no push button. I've come up with a new phrase for realtors. They're called push button realtors. They're realtors and they're not typically with Jack White. They're realtors who are untrained and all they know how to do is push a button on their computer and send something out the door, whether it's right or wrong. They just push buttons, push button realtors.
Wow.
Now, without engaging brain, gives people a lot of trouble. Okay, really fast. My name is Kathy Fernandez. I'm a realtor. And yes, I do still love real estate after all these years. So that's the, do you still love real estate or do you not? Around the room, confess.
I'm Billy Worthy. I'm a realtor. Yes, I still love real estate.
Yeah. Really think about that.
After these short years. Huh?
After all of Kathy's years, I still love real estate.
I'm Sarah Stansberry. I'm a lender, and I do still like lending or love lending.
I'm Carl. I'm a realtor. I do still love real estate.
I'm Chelsea. I'm not a realtor anymore. I work at a title company and I do love what I do in real estate.
Clever.
Maybe, that was kind of a maybe sign. Yes, sir.
I'm Joe. I'm a loan originator, and I have a mixed relationship.
It's complicated.
I love it. I love a lot about it.
I'm Bill, and I'm a realtor. And I'm a realtor with a little R around the end of it because that's very important to what I do in my ethics. And yes, after all these years, I still love real estate. If I didn't, I'd quit.
How many years have you been in real estate?
2005, 13. Well, 12 and a half.
Okay.
And when I first came to the office, Kathy says, "You're going to do well at this." I don't know how she knew. Okay.
After you've been in a while, it's not hard to tell. You can just pick out personalities.
Yeah, kind of tell, and then I've been surprised by people. I've been surprised. For example, and I this won't be taken in credit, I did not think that Jamie Harvey would do well. He's done exceptionally well.
Yeah.
Which Harvey? Jamie Harvey. Oh, I didn't think he would do well, but he's doing amazing.
What, may I ask, what was it about him that you did not?
No, you can't.
Not on the air.
No.
I'm
He's doing
cheating.
well, and he's lovely to work with. Talk about
He is.
dotting i's and crossing t's.
Yep.
He is on top of everything.
He's
His
very good.
contracts are beautiful. He's not a push button.
My name is Suzanne, I'm a realtor, and I still love realty after all these hours.
Thanks.
Hi, I'm Amanda. I'm a realtor in Yeltsin.
Very good, thank you. Thank you, thank you. We just had to have that affirmation before we get started. Okay. I already did mine.
She did her. She did it
I was
first.
the first one to confess that I was a realtor. Okay, so the story you heard, if you were at the sales meeting, was I got a phone call from an elderly lady. An interesting relation. Oh, you know, I have to tell you the really funny story. So somehow this woman has my business card. I don't know how she got my business card. Maybe she came to an open house a long time ago. But when she finally calls me, she's already mad at me. And she's she's Asian, so I was having a little difficulty understanding her. But I could tell she was mad at me, and when I finally could unravel what she was saying, her complaint was I hadn't called her back. And I'm thinking, I don't know who this lady is, and I don't remember I mean, I don't remember ever talking with it, but I said, well, I'm sorry if I didn't call you back and I was supposed to. How can I help you? I want you to sell my house. Okay, well, that's what I do. No problem there. So I said, let me come visit with you. Let me look at your home. And we'll go from there. And then, of course, I did all my research. Your home had been on the market before for less than 30 days with a very good realtor with RE/MAX. And what I've unraveled from that is she had it on the market with her children, that she practically supports her adult children to talk her out of selling. But anyway, so now I'm supposed to go to her house, right? Here's my business card. And I get to the house, knock on the door, and she comes to the door and she's about this tall. She looks up and she said, "Oh, I thought you'd be younger from your pictures."
Oh, no.
Oh,
Nice to
okay.
meet you too.
Oh, that's incredible.
Anyway, so I said, well, I'm sorry to disappoint.
But experience shows.
I kicked my shoes off, we toured the house. Anyway, eventually, when I asked her what her loan balance was, she said she didn't know. I said, well, may I look at your loan papers? And I looked at her loan papers, and lo and behold, realized that she has a reverse mortgage. And I don't know anything about reverse mortgages. But I don't even know if you can sell a house with a reverse mortgage. Somebody told me some time ago that reverse mortgages, there is a lot of things that they don't tell you when you get a reverse mortgage. And Joe's going to share that with us. Anyway, so I took her paperwork, and I came to the conclusion that she owed about $12,000 more than she thought she owed, because every year that goes by, every month that goes by, the loan balance increases. So she's going to come into the office. I'm going to have her there. We tried this last week, but we called too late. We're going to call her bank, find out what it's going to take to sell it, what all the intricacies are, what her real loan balance is, et cetera, et cetera. So then I called Joe to learn things about reverse mortgages as well before I met with her. So Joe, you're on. Tell us everything you know.
All right, well, I'm far from an expert because it's not a loan program we've ever done, even going back to the time that I was a loan processor. I did talk to John Carmen about it, and he gave me kind of state. The point is of a reverse mortgage is you have to be of a certain age. That's one thing I don't know. I'm assuming it's probably 65 or something to qualify for a reverse mortgage. There's actually a chart about how likely you are to die over a given period of time. That's basically what happens. They're looking in their investment in those terms, right? And so a reverse mortgage, basically the point of getting one instead of a regular mortgage is you don't make a payment. And in fact, you get paid out of your mortgage.
So do you have to have your home paid off to get a reverse mortgage?
No, but you have to have a lot of equity in it, and you finance into the reverse mortgage. Now, there are ways to get a monthly payout from your mortgage, but in that case, you have to accept a variable rate mortgage, so you never really lock in, and that's getting way into the weeds. I don't even really understand how that would work as far as a moving rate and getting paid out in the future. But that's not the typical kind. The typical kind, people will get one lump sum out of their mortgage equity that they'll use for something, and they never have to make payments. They do have to pay for their property taxes and their insurance, though. They can't ever get away from that part. So it's not like they don't have any payments on it. They just don't have a mortgage payment. And even when the property goes underwater, and this is the part where I wanted to press John some more. I'm sorry, guys. I thought this was on Wednesday, to tell you the truth. So I gave him a call this morning. I wanted to get this stuff figured out before I came in here. But what happens is if the property goes underwater, the bank is not expecting to receive that loss back. Yeah.
So the bank does an actuarial study on the age and health.
Yeah.
I wonder if if the seller has to even have a doctor's report about their health.
I wouldn't doubt it.
Yeah.
In certain, I mean, they're probably looking at medical records and under certain situations, you would think.
Because in your situation, you told me that the minute the bank learned the owner of the house died, instituted foreclosure.
Yeah, that it went into probate, there was no will. I was doing a refinance and they called me up from Arizona. Property was up here. One of the sisters is living in the property and taking care of their father before he passed. As soon as he passed, they were trying to, figure everything out, didn't have a will. So they called them up and she said they were really nice to begin with, but then suddenly they were being directed to an attorney. And they mailed out a bunch of letters to anybody they could find, even cousins and stuff like that. People who had nothing really to do with it and hadn't seen it for 40 years. And they were getting foreclosure notices. Yeah, it was really weird. And they didn't even know who what do they call it when someone's...
Were they the heirs? They were the
Personal
representatives.
Yeah, the personal
Trustee.
representatives. They didn't know who the personal representatives were. So they apparently were doing Google searches or some kind of private, I don't know how they were getting these names, but just shooting them all over the place. And
Ancestry.com.
Yeah,
Oh,
exactly.
really?
That's really
Yeah.
what it came down to. And then the two daughters who were actually the personal representatives of the estate then was like, well, these people are trying to file legal action against us and all this stuff. They're going to ruin our credit. They didn't know what to think. So they stopped communicating with the company and the attorney. And then at that point, even getting payoffs. That was the big problem with us, is getting payoffs from this company. And we think that because it was in pre-foreclosure, you can't just order a payoff from a property that's in foreclosure. Typically you have to, you have to talk to someone higher up the chain before you can actually get a payoff for a property in foreclosure.
So Joe, with what you've experienced, if any of us have the opportunity to put a home on the market for a seller that has a reverse mortgage, what would you think the proper steps would be that might be different than our normal steps when we put a property in the market? And Chelsea, you probably have some input on this too, haven't you?
A little bit, yeah.
Yeah, I'm thinking the biggest thing is to get an idea of how long we think it's going to take to sell, and kind of figure out what the timeline is going to be, because the proceeds that the seller is getting are going to shrink as you go along until they run out completely, and that's really relevant to know.
But I just heard you say that, let's say the seller owes $100,000 in a reverse mortgage situation, and over time, the value of the home is sunk to $80,000.
Mhm.
Did I hear you say the lender leaves that $20,000?
That, well, I printed something out that I haven't gotten to read in its completion, but it was saying the rising loan balance can eventually grow to exceed the value of the home, particularly in times of declining home values, or if the borrower continues to live in the home for many years. However, the borrower's estate is generally not required to repay any additional loan balance in excess of the value of the home. So just off of that, I can't imagine though that when you're selling it that the lender isn't going to try to pull any of that money back.
If the estate's big enough, I would think that they'll come after you.
Yeah, you would think.
Yeah, because if the owner passes, and just say a child takes the home or within the will, they still have to pay that back.
Oh yeah, yeah.
Josie, what do you do?
Well, fortunately, I haven't closed on any that are an estate that had a reverse mortgage. However, we have closed a lot of reverse mortgages on the front end, so people actually getting a reverse mortgage. And that is typically similar to how you would close a normal transaction. There's a lot more paperwork, but and as far as payoffs go, the one thing you'll notice that's different on your preliminary title commitment is you'll see 2 deeds of trust. It's just how the reverse mortgages are set up and how they're recorded. So you'll see 2 on there, but really it's just the reverse mortgage. They're both tied together. And as far as payoffs go on our end, they're not that different from how we would normally acquire a payoff. The one thing that I would maybe suggest is if you are listing a property that has a reverse mortgage and you know there's a reverse mortgage, it might not be a bad idea to just call and get a payoff quote, because payoff quotes will include a lot of fees that are outside of just the principal balance. So you have to take into consideration their reconveyance fee and whatever other fees that they have, because probably the reverse mortgage is somewhere being serviced elsewhere. And usually with a lot of the bigger companies, they'll have more fees. So I would suggest getting a payoff quote in its entirety at the beginning, so that way you know what you're looking at.
When I just did the refinance, we did with Stephanie Kiefer.
Yeah, Stephanie's the one that does all of our reverse
Oh,
mortgage
really?
stuff usually. Yeah, I asked her if she had time to swing by today, but unfortunately she didn't have a chance to, so.
So what's a personal representative? Exactly. That was John's question to her, because we were in a weird situation where we were refinancing, but the people we were refinancing into the permanent financing weren't actually entitled on the property, which is weird. And because the
Or
property,
like they were buying the property.
yeah, well, if you're going to refinance, they have to be entitled, and we didn't
Right.
understand. So how does that?
So
work?
a personal representative's deed is basically the deed that transfers ownership of the property when the seller is an estate. So it's the personal representatives that are signing the interest over from the estate. Because if an estate is entitled to the property, the people who are personal representatives are not individually entitled. It's still the estate. So the main difference between a personal representative deed and a warranty deed is that it's an estate transferring property.
Chelsea, can a couple that holds their real estate in trust do a reverse mortgage?
That is a great question. That would be up to whatever lender is providing the reverse mortgage financing. Because even sometimes regular financing, people can't purchase within a trust. It all just depends on the loan type and the lender's requirement. But that is a good question. I don't know the answer.
And before we adjourn, Bill has a question about VA assumptions, but we'll get this.
Well, I was gonna talk about that at a later point.
Oh, okay. All right. So how many pages is that paperwork you have there?
Wikipedia.
Oh, no.
Because I was thinking that Amanda could email that out to our attention.
It's possible. I mean, the first part is by country. It goes into reverse mortgages in Australia. So, and then Canada. So, and probably what I'd want to do is parse it down so that it's useful to at least just the United States.
That's a good start, yeah.
And then send it over.
At least it would give us a cursory, because as our population ages, we are all going to find there'll be sellers that will want to sell that have a reverse mortgage.
It's going to be so much more common in the next 20 years.
Yeah.
It really is. Now it's super common in Arizona, Florida,
Where there's an
Palm
older
Springs.
population.
Yeah, where there's older populations, but it's weird how little experience your average lender has up here compared to a lot of places like that.
So in a reverse mortgage you don't have to own your home free and clear. You could own a free and clear, but let's assume you own a free and clear. In a reverse mortgage, does the bank give you the value of your home lump sum? Or do you just get monthly payments based upon?
There's two options. There's two ways to do it. If you want to get paid out on a monthly basis from the equity of your property, you can. But your fees are going to be stiffer. They're going to be, and it's going to be a variable rate mortgage based on what the market's doing at the time. And so the amount you're getting paid out isn't going to be consistent. And that's what I got from John when I talked to him earlier about him. But that's less common. More common is getting paid a lump sum at the beginning, paying all your mortgage fees out of that lump sum for actually doing it, origination fees, points, whatever is going to be charged. And then from then on, not making any payments except taking.
And you don't get any additional monthly payments, you don't make any payments, you just keep your taxes and your insurance.
Yep.
You probably need to notify the lender annually that you've done that, I would think, but you could get a lump sum.
Yeah.
Wow.
Yeah. Right off the bat.
You know, and if I think about this lady, I just wonder if her children didn't somehow talk her into a reverse mortgage, so that she would have all this money to help them with. I am now convinced that's what happened.
Yep.
Well, that brings up a whole different topic on elder abuse, which I don't know if you guys have dealt a lot with that topic as a whole, but elder abuse is something that's becoming more and more prevalent, unfortunately, in our society, where people are persuading older family members or friends into doing things, selling property, buying property, even when it comes to all kinds of different money, just persuading people to do things that maybe they don't necessarily understand anymore with their age. So it's something that we have to deal with as far as a title company, to make sure that if we are dealing with elderly people, that they are of the right minds, that they know that they're selling their property or whatnot.
How do you screen for that?
It's basically, it comes down to like a judgment call with the notary a lot of times. Because as a part of your notary duties, you need to make sure that the person understands what they're signing. I mean, you don't have to explain the document to them, but they need to be able to understand it. And it all comes down to whether or not you think that they comprehend exactly what they're doing. And that'll come into a lot of like personal conversation, maybe getting a feel for how they are as a whole, just with general
And doing it
questions.
for the right reasons.
Exactly.
That brings up another story. Amanda and I met the other day with Albert and Navy that owns a duplex free and clear. And she needs a duplex now side by side with no stairs because of her age. And so Amanda and I met with her here. We met at the duplex. And at one point, and upstairs, living upstairs is her grandson, a lovely young man actually. And there's a gentleman living in her duplex with her in a separate bedroom. And so I looked at her when we were talking with her with her little dog yapping, and I said, "So how much rent does your grandson pay?" She said, "They don't make much money." Oh, so here's this lady owns her duplex free and clear. She'll take the proceeds of the sale to buy a side-by-side duplex, no stairs. But they're living on it.
And then you really do remember she mentioned that they paid for electric, that she paid for electric.
And she pays their utilities.
Yeah, she even paid for utilities. She can't.
And she's spry, but really old, older than the little Asian lady.
So,
You know, there's probably a lot of that. And that's obviously her choice, but
so the Asian lady gives me more questions about elder abuse, because how much better at the English language are her children than she?
Yeah.
And so when she's in signing something, okay, who have we had to interpret it and say, you know, you're taking out a reverse mortgage here. Are you sure you want to do that? And those kind of questions. Fortunately, you didn't take her there, so.
you know, now that I think about it, she had a realtor that helped her buy the property using the reverse mortgage. And not a known realtor. I'll look at that again. But her explanation, and she complained a lot about everything, but her explanation was that the realtor kind of talked her into it.
It's sad. I hear
Who
that.
drove that?
Yeah, I hear that.
She claimed she did not realize she had a reverse mortgage. Now, I think she kind of underplays what she really knows, but still, she didn't know her balance. She didn't have all her paperwork, and her credit was ruined by one of the kids, supposedly. When I first met with her, she didn't have a car. And as having been in this business a really long time, our job isn't to save people. We cannot save people.
Yep.
So I make people who are challenged in that way play with the same rules in my business relationship with them as I would anybody. So I said, the next thing I want you to do is I want you to come to my office so we can call your bank and you know, get to the bottom of things. She said, well, can you do it from my house? I said, no, I can't. No, but I'm not going to. Because, especially the more challenged these people are, the more they're going to expect you to do more and more and more for them, wash the windows, make the beds, and you cut your commissions. No. They have to play by our rules. And we're the professionals. Your attorney, your physician, not going to come to your house. And we need to think like that.
Well, I remember the day the physician came. many days.
Seriously? Really?
Not recently.
Uh-huh.
No, I wasn't very old. But mom didn't have to take me to the doctor. The doctor came to visit me.
You're not that old. That was 100 years ago. So we're getting close. but-
Close. The doc came to our house.
Seriously?
Oh, yeah.
You are old.
Oh, yeah, no, the doc came to our house.
Is it real rural?
No. It was a great big town, 8,000 people.
But the point of my-
Right outside of Washington, I mean, Baltimore.
The point of my story though is you're gonna meet people that are rich.
Yep.
And you need to- Like my mother used to say, we and God will help those who help.
This
Your
little
mother was right.
lady, I have to share this in story as well. You weren't here at the office for this. Oh my God, you didn't remember it. This little lady took a whole day to navigate her way here. She would stop along the way and hold up Kathy's business card.
Oh, the same like the.
Yeah. And
She
say,
got here.
how do I get here? How do I get here? I spent a whole day figuring out where the building was. She finally makes it here. She comes in and in the little English she was Kathy Fernandez. You know, she was just saying Kathy Fernandez to me. Yes, I work. Anyways, long story short, I get Kathy on the phone and we all realize what's going on and who she is and everything. But I thought that
She
said a
showed
lot.
up, she showed up without an appointment to make sure she could find the
To make
place.
sure she could find it.
That's awesome.
Better do a
So,
pre-trial.
she made the effort.
She got her car back and she got there.
Oh, this is the same lady.
Yeah, she'd get out at different stores and hold up Kathy's business card. Retired,
How do
has
I-
time to
She
do
now
it.
have a smartphone that she can put the
Oh, yeah, no,
address, tells
she-
you where to
Oh, yeah,
go.
no, I tried to even show her, I tried to show her how to use the Maps app. I tried to use her, say Siri, take me to blah, 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 and she'll do it.
Or a paper map.
Anyway, but this is what happened, y'all, so be warned, we can't save everybody. All right, well, you know what? Is that it? Pretty much, any questions?
Well, this part
Any
might be
questions?
useful for general information real
Well, I
quick.
think it's very helpful, and I think.
Well, no, I was just gonna say right here, you have to be 62.
I'm sorry.
Reverse mortgages are through FHA.
Oh,
They were signed into law in 1988 by February 1988 by Ronald Reagan as part of the Housing and Community Development Act. And yeah, that's all the relevant information. Just a little bit of history. You have to be 62 though. That's
Any idea on how many people in the United States have a reverse mortgage? Anybody can read that? I didn't realize it's been in existence that long.
how many people have them, like percentage wise.
Yeah.
Of the elderly population, I wonder how many people over 62, like what percent have them? My guess is probably less than 20%.
Or way less.
Yeah, way less than 20% of people over.
Because I think in, even being in the business, when I hear about it, I feel there's a stigma. It's something, it's kind of thing that if I had a choice of doing a reverse mortgage, and I would have that choice, I would be terrified to do it. And yet I'm in the real estate business. It's very.
Yeah, no, I think there's very little good to be gained from reverse mortgages if you're taking one out. You got to be at the last of your ability to pay your bills. In my view,
I think you're right.
okay, I think it's a last resort, and you're using the only equity you have left. Okay,
To live on.
and so think about the families, and I had an aunt that died at the age of 99, and she was within 2 months of using all her resources. Okay, and finally, when you use all your resources, the government will start assisting you in the nursing home. Okay, but she did not take out a reverse mortgage because she had some financial people like my sister helping her and saying, no, if you're going to take out a reverse mortgage, just sell it.
Live
Because,
off that,
yeah, and live off of it until it goes away. And then, because that's what you're going to have to do to get onto the, government assistance programs anyway. But, if the actuarial tables say that it's, that she's going to live till 99, which they don't, she'd have run out before that.
She defied their
So,
Abraham.
To answer your question, Kathy, of the US population, about 10% are seniors of age for the first mortgage. Of that percentage, only 2 to 3% of eligible Americans have a reverse mortgage.
2 to 3% down.
2 to 3% of the 10%. So of everybody in
So
the US, 10% are
Point-
eligible and 2 to 3% actually take advantage of that.
And of those 2 to 3%, they're probably concentrated in a few spots in the United
I
States.
That's
would
my bet
imagine.
too. And I don't think it would be, it surprises me if it's Arizona or Florida, because that's where people moved to buy things.
Oh, yeah.
And most of them
Good point.
bought with cash so that they could retire there.
Well,
Seems
if
to be a
most of
large
them
number
bought,
in
I think-
California.
Yeah, California doesn't surprise me.
I would say if most of them bought with cash though, then you have more equity in your
You
property.
had the
to
ability,
get
but you
a
didn't
reverse
need to.
mortgage. Yeah.
But you don't need
So
to.
here's another fun fact. According to the US Census of 2010, a little over 20 million. I mean, long story short, they put together a chart of all this data, and according to this chart, in just 3 decades, the number of seniors in the US more than doubled.
Mhm.
So, and America essentially is over the next 3 decades going to
So I
look
have,
ancient.
but my,
Reign of America.
my grandpa is in the middle of doing a reverse mortgage. And so that's why I was trying, I wanted to come here today because I didn't want him to do it, but he's 86 and he's in a wheelchair and he needs it. And so, but he can't get the reverse mortgage because it is being first lien position and he's got something out there from 1983 that he needs to pay off first or whatever, find out what it is. But I just don't really want him to do that, but he needs it because, my grandma's in a home and stuff, so. And then the house is not ready to sell out, oh my gosh.
Is it,
What's an advantage to a bank that does a first mortgage? What's the heck with the bank? How do they get their investment handled and covered? Where's the,
Well, they charge a lot. I mean, it's not a cheap mortgage to do as far as discount points and upfront fees and stuff like that. And the interest that gets tacked on is steep. So that balance is going to be rising. But to tell you the truth, I mean, it would have to be just based on their actuarial tables. They're looking at these numbers in the aggregate and figuring if we set things up this way, we'll have a net profit instead of a net loss. But I'm sure that there's periods of time that they do take a loss by a bad roll of the dice, just like any insurance company is going to take losses. But yeah, they seem really weird. It says here that in 2014, they had to revise the rules because under the old guidelines, if there was a surviving spouse and the older spouse died, the reverse mortgage balance automatically became due and payable. Yeah, up until 2014. Can you believe that?
1988.
And so now they've just changed the rules in 2014 in April, like basically, 4 years ago exactly. It says the surviving spouse can now remain living in the home without having to repay the reverse mortgage balance as long as he or she keeps up with property taxes and homeowners insurance and maintains the home at a reasonable level.
I wonder if that's the case if both of them are on the loan or if it was just one of them that was on the loan. Does that make sense?
Yeah.
So like a husband gets a reverse mortgage and then he passes away and then the wife is the one that's left with the bill. But if they were on it together, I wonder if that would be the case.
well, that brings up another question. Do you actually have to qualify for a reverse mortgage other than age? What if you have terrible credit?
Yeah.
Can you still do a reverse mortgage?
That is a good question. I'm sure that there's some kind of qualification, but I don't know how that works.
Well, yeah, so, I mean, think about the requirement, just the requirement alone to keep your taxes and insurance up to date. There are people out there that would fail within year 1 or
Yeah.
within year 2.
If it wasn't part of their mortgage payment?
Right, if it's not escrowed, and
Yeah.
apparently it's not,
It's not.
okay? So then you go, okay, well, I got my $100,000 out of it, and I went and bought a new car, and I paid off my medical bills, and I did all these things, and next year rolls around and you got $8,000 worth of taxes due, what are you gonna do? Where's that coming from?
So
It's not automated then.
So can they pick a certain amount of the mortgage or this
I
mortgage?
got no clue.
Pick a certain amount of what?
Like, if you have 100,000 in equity, but you only want 50,000, can you do that?
Yeah, it sounded,
It's
it
what?
sounded like when you get the lump sum, there still has to be a substantial
Yeah.
amount of equity left in the
Right.
property
Okay.
when that reverse mortgage is done.
Okay.
And I'm not sure what that requirement is, if you have to have at least 50% equity left over or something. And it might just depend on the age of the person at the time that they do it. Maybe the amount of equity that's required, maybe the younger you are, the more equity that's gonna have to be left because you're expected to live longer and that balance is gonna have more time to rise. I don't really know.
So interestingly enough, the article I'm reading, it predicts that reverse mortgages are going to, number one, it was saying that as we're living longer and their savings are literally running out before they die. Was one thing, the cost of healthcare was going up and it had a ridiculous number in here, seniors with
Well, not necessarily if you're going into a home or something like that.
$200,000.
Absolutely.
It's like 6 or 7.
Just takes one open heart surgery.
Yeah.
Holy cow, yeah, well, this
Just-
was talking about.
Just takes a helicopter ride from one hospital to
Yeah,
the other, there's
seriously.
30,000.
Seriously. No, seriously, it's talking about due to the rise of the cost of healthcare, the cost of care for a senior citizen, in a house, like all those costs, they're saying that this is part of what is, what we go to do a reverse mortgage, because they're needing the money. Their savings are running out and not that.
And there's a good point, Bill, I mean, most of these elderly people, their home will never be ready to sell. And I don't know how they ever have it cleared out. Even if you sell them as is, getting them cleared out.
They're already old and just getting older.
Yeah.
Well, then from your perspective, if you think about it, if someone were to pass away that had a reverse mortgage, well, their
I
home
know.
is not gonna
Like,
be
don't leave
ready.
the house.
And so the estate's gonna have to put more money into the house to get it ready to sell, and they're already having dwindling equity.
Well, we're presuming that the estate isn't great big because they had to take out a reverse mortgage to begin with.
Yeah.
So is it almost a disservice to your family that you will be leaving behind to do a reverse mortgage?
In a way, that's kind of what it seems like to me,
That's
yeah.
kind of how
what you're doing
what I'm
is-
getting from this.
That's
It's
how
like
they
you're
don't
really leaving,
the house clean.
yeah, right? And you're really leaving your family in a rough spot after you go.
Because
Yeah.
as soon as the death occurs, it immediately goes
It
into.
goes into foreclosure. So
Whoever's
is your,
on the well.
yeah, is your family then
Well,
expected to repay
The
that debt?
question is somebody living in it or not?
As
They stuck with them.
I understood it, it doesn't necessarily go directly into foreclosure, but in a situation where there is no one named, there is no will, it goes into probate, then that's when it
Okay.
goes.
All right. Is it perceived as a
That
very
that actually
risky?
makes sense, because the bank, in your case, Joe, jumped to potentially foreclosing because they had to protect their interest in the house.
Yeah,
Especially since there was no will or anything of that nature, there was nothing that said who was responsible, so with no responsibility, they probably had to drive on with it, that little bit of.
Well, plus they gotta own it before the taxes come due.
and I don't even know how they calculated the payoff, but from the time we started and I got that original mortgage statement, we started our refinance in January to the time we closed, it took till the end of March. The balance went from 156 to 162.
That's what I saw with the little paperwork I saw with the agent.
Well, that,
It's it increases astronomically.
It was huge, yeah. it was huge.
particularly in your case, though, you have to take into consideration that they were going into the foreclosure process already. So when they start to do that, you start to accrue even more fees than just the normal payoff, because you have to start paying attorneys and like notice fees and
Yeah.
recording fees and all that jazz. So that's when the payoffs really start to go like.
Just bleeding money. The less money you have, the more money you bleed.
When I've seen that, we have to take classes every year, obviously we all do for our jobs. But there was this guy who's a specialist in reverse mortgages. And there was like a little video of him telling us about it. And the way people that specialize in them market them to elderly people is like, you're going to have so much more money to live your life and travel and live your dreams and all this stuff because you won't be saddled with this mortgage payment.
How they sell it to people.
Yeah, that's how they sell it to people. It's, I mean, you can see how in just the perfect circumstance, maybe it works out for people in this great way. But just like a lot of those bad loans that were going on in the early 2000s, I mean, for the most part, it's your soul snake oil and it's gonna catch up.
Bill, you had questions about VA assumptions.
No. I was just drawing something that I used to share with the Boy Scouts. It's the secret to making $1 million. Okay? You look at the top part of this chart. Okay? You said that it was growing exponentially, is what you said, or words like that, to that effect. That's an exponential curve, and it represents compound interest on savings over time. And it truly is an exponential curve. And that's how you make $1 million, is you invest at compounded interest. That's compounded interest on debt. Okay? It goes down, and it gets big really quick after the first couple of years. And of course, remember that one is going to be, that curve is going to be much more shallow because you're at 3 or 4 or 5% on interest on savings. And this one, if it's credit cards, is going to be interest at 18%, and it's going to drop like a rock. Debt is awful. Okay? Compounded interest on debt is awful. Keep your credit cards at 0. The only things you should borrow for anyway are a house and a college education. Just saying.
Air high five to that.
What about cars?
To the best of your ability, don't borrow for a car. Buy the first one used, then start putting the payment money in a savings plan until you have enough to buy the next.
How about renting a car as a business?
Leasing it for a business is actually not a bad idea because you can write the whole thing off right away. But I don't do that.
I want to own it. Then I own it for 20 years.
Yeah.
But you had a question about VA assumptions. It's a good time to ask.
Okay, so 3, maybe 4 years ago, I was helping VA buyers buy new homes or old homes, used homes even, with a VA. And the VA rate at the time was, let's just say 3.25. Today, the VA rate is 4.75. And that's 1.5 points different. And on the average home in good old Alaska, that's a difference of $325 a month on a $300,000 mortgage. So it is quickly coming to pass that we may be able to sell the home with the VA mortgage. And VAs by their nature are assumable under the right circumstances. To whom do you go and what are the steps to do the transfer of the mortgage? I know there's a qualification process. Who runs that? What are the application fees? And how do you do it? So does Home State even do that? It doesn't sound like it.
One done.
Well, you see, and I wouldn't think we come to you except for the qualification letter.
But I'm going to ask the expert right now.
No, you go to the,
Original bank.
yes.
Yeah, I would think you have to go to the bank.
Yeah, like
So, have
Wells
you seen
Fargo.
any yet?
We close them every now and
Hey, on
then.
a VA
So
assumption.
they have to come in with that equity.
where
So
do
they
Yeah.
want that
people
percentage,
go
yeah, and they would have to go to that bank.
That's
I
always.
haven't seen.
More people can afford that extra payment than have the 20,000 or 30,000.
Yeah.
Yeah, but the VA is still a good deal.
Okay.
And there are some people that
And
would
so the
want
seller
the interest
would
rate
contact
and would have the
their servicer.
have
and
the
say,
cash to do
How
that.
do I put you?
Or sometimes you'll find in downward spiraling markets, you'll find VA sellers who just have to bail out of their property and they don't care, they don't want it yet.
Right,
That's what you're looking for.
right. Well,
So you're still at 0 or 3,000.
but we're looking for somebody that can pay our fees too. Don't
Well,
forget those.
but those sellers are not even going to be involved.
Yeah, okay.
Yeah,
Okay,
they should
and
just.
the servicer would be the one to do it.
The original.
The servicer.
The servicer, that's different than the bank.
Well, if you think about it, I
Only
mean,
500 to
loans
1,000.
get assigned and assigned and assigned.
That's
and
not-
servicers
Whoever
change
currently
and
has
change
it.
and change,
Right.
they want to be with whoever has it currently. But I do believe that
So there
it
would have to
ties
be
up
down
the
payment, though,
VA
right?
benefits.
Not if you do it correctly, and that's the other reason I asked the question, is that there is a way to transfer your VA eligibility to the new guy.
All right, thanks, Trevor.
As long as they're.
There is a way to substitute your,
Okay.
your VA certificate.
When I was working in Houston and interest
All right,
rates were
thanks.
moving up to 17%, we were selling VA loans on existing properties where the interest rate had been 5 or 6%.
Right.
We sold zillions of those,
Right,
as long as the buyer could pay the equity.
Right.
And sometimes the equity wasn't that great, enough for us to get paid. Sometimes the seller brought our commission to the closing table, but we sold a lot of those.
yeah. Yeah, see, I think we're moving in that direction now.
Slowly, I mean, the interest
Yeah,
rates
it's
are
not
going jacked up.
I hope it doesn't get up to 11%, which is what I got 11.5% in 1982, and I was happy as
Oh,
could
yeah.
be.
1982. One of the stories I tell is I sold more homes in Houston when the interest rates got to 17%. And it came out on my team, do you know why? Why were we selling so many homes at 17%?
Where did it go higher?
Yes, ma'am.
Mhm.
They were terrified it was going to go, and it was going to go. We had great years after.
Catch 'em high.
And then the bankers had several great years because interest rates kept coming down and they kept refining.
Yeah, that's true.
What'd you learn, Joe?
You go to the servicer, and since, you have to look at the value of the home versus what the loan balance is at that time. He says it's common if the new VA buyer, not common, but it happens where if the new VA buyer doesn't have the down payment to cover the equity, that they might take a note back from the seller. Yeah,
It's called carryback.
Yeah, seller carryback.
yeah. And it's not very expensive. He said $500 to $1,000.
So that's not.
Yeah. Yeah, it's not bad.
See, we're at the point where it's the payment difference. That's what's gonna drive the train, is the difference between $350 a month is a big number.
That's huge.
Well, thank you, Joe, for all of that. If there's anything in your paperwork that you think would be of value.
Yeah,
let
there
us
is
know.
definitely some stuff. I'll do some cut and paste and send it to Amanda, right? Okay, cool. And sorry, I'm dealing with this cold in my head, it's a little cloudy. But,
No problem.
yeah.
Anything else? Anybody else have anything of value that we talk about?
I have a field problem.
Oh, I want to
Take
get
it
away.
away,
We can fix it.
I wish you could. It's something that we're encountering a lot more, is that there are certain lenders that are requiring to review LLC and trust documents for the seller, which, if you think about it, that's private information, and it's our job as the title company to review those documents and say so-and-so is authorized to sign on behalf of the LLC or the trust. But there are certain lenders that are actually wanting to review the documents for whatever reason. And so it's been something that we've been encountering, unfortunately, more and more. And so we're trying to get around it because we don't want to have to share that information because it's your seller's private information. And it's our job to make sure that that's reviewed appropriately. But in case you do get asked about it, that is what's going on. There are more lenders asking to review. Now, I don't know
What are
who they
what's the
have.
reason behind that?
I have no idea. And it's funny because we list in our prelim that so-and-so is authorized on behalf of the LLC to sign as authorized agent or
Signing
something like that. Yeah, and I don't know why they're maybe it's a new underwriting requirement for them or
Chelsea, I think it's
something.
from the top down. I think it's government wanting to know everything about our business, who our LLC partners are and what percentage is, but I think it's that.
Yeah, so it's just something that we've been encountering more and more. We don't release that information, and if we had to, if it was your seller, we would contact you to make sure that your seller, we have their authorization to do so. But we're fighting it as best as we can to say, hey, this is our job, and we review these documents,
Are these
and
local members asking for this?
yeah.
I can't think of one loan guideline that would anything even resembling that. That's really bizarre.
So maybe the pushback is this is part of the loan guideline and show me the guideline.
I guess, I don't know. But it's
Yeah,
just
I've done
something
that to
we've
these
been-
guys before.
It's worth doing.
Show me where it says.
Yeah.
Amanda, did you have a question?
No. I don't. I was just.
Oh,
She has Amanda.
Oh, I'm sorry.
okay.
Sorry.
Well, if you think of it, yeah.
You're not allowed to forget.
I just
your
wanted to let
freedom.
you guys know because it's something that we've been encountering,
So
unfortunately.
if we have sellers that own in trust or own via an LLC, be prepared for some issues.
Well, no, not necessarily. I mean, we require review of the documentation, so we're gonna ask you for that documentation anyway. But unfortunately, buyers and lenders have been asking for it as well, but we won't release it until we have your authorization
But I
to
think
do
the
so.
takeaway
But
for Joe is pushback, it's not a lender.
Oh, yeah.
Loan guideline, why?
yeah, we
And do I
definitely
need to
been
take
pushing
this to Joe over at Homestead or?
It's just really heard of any loan guideline that makes you dig into the seller's business.
Yeah, I don't know why.
You know,
Well, and there have been out-of-state lenders that want to see a copy of the payoff statement for the seller as well. Yeah, but I haven't encountered that lately. It was something that I encountered a year or so ago, but I
Is
mean,
that just to know that
it
you actually
depends.
go to closing?
It-
There are no-
well, maybe it's because it's an invoice listed on the settlement statement and they want to verify it or
okay.
quantify it. I can understand from that perspective, but there are some lenders that have some funny things sometimes. So be thankful you have home state in your building.
So I remember my question. So it's the seller's trust paperwork, but it's the buyer's lender. Is there any way, if you could get the buyer on board, that you could say, hey, look, this is the seller's personal and private information. If you can't show me a guideline and you're still going to be requiring this, the buyer is opted to take it themselves?
Most likely, I mean, a lot of times we can kind of make headway on it because it's our due diligence and our job as the title company to review that documentation because we're the ones having the seller sign the paperwork saying that you have the authority to transfer this property.
Yeah.
And we're the ones insuring on that. So,
Yeah.
I mean, it's something that we do anyway. It's a part of our job description. So for them to ask for that information is kind of above and beyond and doesn't make any sense to me. So,
Very good, Joe, thank you. And Amanda, are we doing HSA next week?
yes.
Okay, so next week's trenches, we've got Miss Maldonado coming in to teach us how to sell home warranties.
Yes. And there's been
And teach us how to sell the extra added on $149 benefit, which I stumbled on. I think it makes sense, but I can never talk about it smartly. So we're gonna have her come on in, so we'll become, how many people sell home warranties to sellers and buyers? Raise your hand.
come on, Joe.
Sarah, Chelsea, what is this?
So
I collect for them. Does that count?
And if you're not selling a warranty on your deal, you have to client sign a waiver. Because if the warranty would have covered the problem and you didn't have them, you didn't introduce a warranty to them, you might end up. Big deal.
And why does she say that? Who knows their contract? It's in your contract. It says we offer a home warranty.
That's one of
And
the
then,
And that's why this.
yes,
Slide down at the bottom right hand corner.
But the VA wants a waiver signed if they don't.
yeah, it's a better practice.
And we actually make the waiver or the warranty document.
And there's been lots of new additions to the services and whatnot that HSA offers, so I've asked Yvette to especially highlight those things. So if you want to get briefed on all the new stuff that they've had come up, she's definitely going to be touching on that, as well as the already in existence stuff, which has some of the home warranty thing.
So how many people who offer a home warranty ask for the well pump to be covered if you're selling on the property with a well and septic?
Great question. Probably everybody should.
Yeah, it's an extra $75.
I was gonna say, is that something that they cover?
No, yeah, but it's an extra $75.
That's worth it.
Okay.
If they had to replace a well pump, that's worth it.
It's hard to crank that sucker back up out 400 feet down.
Chelsea.
I had fun. Thank you.
Oh,
Thanks for joining us. Don't come back.
I thought you walked out, I was like, me? Oh, or Joe.
Billy, you look like you
Yeah.
like a challenge. Fill that one.
I really did, that's what I remember.
No, it was really built, and the wind came along.
Today's my Friday. Sorry. Love you.
Just up beside you.
Hashtag sorry, not sorry.
Sometimes I wear.
Where's the road?
He's in Hawaii.
Amanda.
He will be back in the office tomorrow, and I will be